We need bookings data. How many new customers are you signing? What's the ARR that you're signing? How are you expanding incrementally your customer base? Because that data feeds go-to-market efficiency data. So if we don't have good bookings data, forget about calculating go-to-market efficiency. You see all these posts, well, ARR is dead and metrics don't work anymore. And that may be the case, but for most SaaS companies, it still works. So let's not overcomplicate things, because it does come down just to basic financial management. Sometimes you build a great business where cash just works and it's growing, and you can get away with not putting a nice financial infrastructure in place, but that's not the case for a lot of SaaS companies.
In today's episode, we're going to deep dive into SaaS finance, metrics, margins, and financial strategy. In short, everything founders need to know to build a financially healthy and scalable SaaS business. My guest is Ben Murray, better known as the SaaS CFO. Ben has over 20 years of experience in finance and operation. He has served as a CFO for multiple SaaS companies, and he now helps SaaS founders and financial leaders make better data-driven decisions. He's the creator of the 5-pillar SaaS metrics framework, has a community of over 80,000 subscribers to his newsletter, and 20,000 students who attended his SaaS financing metrics course. Within this community, you find templates, courses, and insights about any SaaS-related metrics. In the next 40 minutes, I will ask you about financial fundamentals, which metrics actually matter, and how to build your financial reporting so the data becomes a strategic growth lever. Without further ado, let's get started. Welcome to the show, Ben.
Great to be here. Thanks for having me on.
Why is financial reporting and tracking the right metrics so important for B2B SaaS founders today?
For a B2B SaaS founder, it's important because really with a SaaS business, we cannot just manage our SaaS business with those financial statements, especially those native statements that come out of our accounting software, which are not set up for SaaS. There's so many interactions with our business, so many different unit economics happening underneath the financial statements that we have to do more with the data within our SaaS business. So financial statements a key piece of it, but we have to do more to manage and grow our SaaS business.
What is the most common mistake you see SaaS companies, founders make when it comes to their financial part of the business?
Yeah, I talk to a lot of SaaS founders, help SaaS founders with my services, interview founders for my podcast. And I think one is just that you can manage your business with your bank statement and with the available cash on hand. And again, that's really important. Cash is king. You always want to be monitoring your cash and cash runway, but that doesn't tell you anything about how the business is operating. Sometimes you build a great business where cash just works and it's growing, and you can get away with not putting a nice financial infrastructure in place, but that's not the case for a lot of SaaS companies. So I'd say just managing with cash, that's a start, but then you have to truly understand the economics of the business and how you're generating that cash. I see a lot looking at cash-based financial statements, but really we have to go to crude, we have to look at the metrics, et cetera, within the founder community.
Yeah, and I guess that's like one common mistake. Is there also another misconception SaaS founders have when it comes to SaaS metrics, or maybe even, I guess, financial strategy?
Finance and accounting, that priority of good books and good numbers can come later. And that makes sense. You're focused on building the product, getting that MVP out there, building out a go-to-market motion, and you forget about finance. You can't ignore it because it can get messy later. Second-time founders, third-time founders, and they reach out to me, focusing on the finance right away. Even as they're pre-revenue building a product, they're like, I want to make sure I have my accounting set up correctly. I have my P&L set up correctly. I see where second, third-time founders make finance more of a priority.
Yeah, we're going to dive deeper into that. You developed the 5-pillar SaaS metrics framework. Let's start with that. Can you walk us through the 5 steps and maybe explain more?
Yeah, we love our SaaS metrics, but where do you start? We need kind of a map, a guide to walk through the metrics for the right stage of our business. The 5-pillar SaaS metrics framework starts with pillar 1, which is about growth. Where is our growth coming from? Is it new customers, existing customers? How is our ACV trending? How many new users or customers are we signing up? Good tracking of growth. Next is retention. So we acquire customers. Now, are we retaining them? We're tracking customer retention, gross revenue retention, net revenue retention. Third is margins. What is our gross profit margin? Important within SaaS. If we have multiple revenue streams, what's our margin by revenue stream? Really important as well. Pillar 4 is our financial profile, EBITDA, rule of 40, our OpEx profile. And finally, pillar 5 is efficiency. Not only go to market efficiency like CAC payback, cost of ARR, LTV to CAC, but also org efficiency. And then I developed a metric called ROSE metric, which is the amount of recurring revenue you generate for every dollar employee, contractor, investment. So that's the framework, and it's a guide as we're scaling our business to implement each pillar as we go.
Yeah. And I think a lot of SaaS founders or a lot of people think financial reporting is only the fourth step. Financial profile, you mentioned a lot of terms in just 10 seconds where maybe people wandered away. Can you explain more, as in, because you have the 5-pillar framework, right? You start with growth. It's not typical that people think about financial reporting and growth, I guess, combined, because they, again, always think about LTV, lifetime value, customer acquisition costs, etc.
Yeah, so of course you have revenue growth, so you can look at your financial statements for that. But within SaaS companies, we have two data sources for growth. One, you can look at your revenue, but we need to look at our bookings data. If you have a go-to-market motion, signing mid-market enterprise customers, a CRM system, you're probably signing contracts with your customers, and that creates bookings data coming out of Salesforce, HubSpot, whatever CRM system you're using. That's one of the biggest data mistakes I see in SaaS. We need bookings data. How many new customers are you signing? What's the ARR that you're signing? How are you expanding incrementally your customer base? Because that data feeds go-to-market efficiency data. So if we don't have good bookings data, forget about calculating go-to-market efficiency. But if you're also like, hey, Ben, I don't speak the bookings language. I've got a PLG product, self-service. Well, we still derive that bookings data from the MRR waterfall. And that's our beginning MRR, new expansion, contraction, churn. And we can derive our sources of growth and then feed that into go-to-market efficiency metrics. So that's one of those big data mistakes that I see, is not tracking that bookings data. So we have growth via our bookings data and then revenue growth.
When you say bookings data, you mean new clients, or I guess not even new clients, but also, as you mentioned, expansion.
Exactly. The booking is an executed contract with our customers for software or services, whatever we're offering. So that could be a new customer coming in, or that customer is paying you $20,000 a year and we sell them some more product and now they're paying 30. We have 10K of expansion, and we've got to track that 10K because then we can figure out the efficiency on our expansion motion.
Yeah. So I guess, like, if people want to get started, what should people have minimum in place when they're listening? Like, I have no idea what Ben's talking about, or how can I get started? Where do they start?
It depends on their stage. Metrics for the right stage of your business, because it can be overwhelming. I just had a founder email me this week and they're like, hey, we're just starting our product. We're pre-revenue. What should we focus on in this early stage? Kind of that 0 to 1 million ARR. And one is just a good accounting foundation. Let's make sure we have our bookkeeping in place, someone who knows SaaS software, that they can put that proper accounting foundation in place. So you go through these stages because we don't have to worry about metrics from 0 to 1. Maybe bookings data, maybe a little retention, but it's about accounting, watching our cash runway, and then we scale from there. We slowly work through the 5-pillar SaaS metrics framework. It depends on the stage you're in.
At least having the bookkeeping in place and then the bank on the stage, it has to become more sophisticated. So let's go through the 5-pillar metric framework. If somebody wants to implement it, what is like a step-by-step process you would recommend?
There are 4 key SaaS finance data sources that we need to operate our SaaS business. 1, for operations. 2, if you're going to go through due diligence, if you're going to fundraise, if you're going to exit, we need this data in place. Financial data, of course, good, clean accounting data, the proper SaaS P&L in place. Founders can do so much just having that nice SaaS P&L in place, because that can tell you so much. So 1 is accounting, financial data. 2 is customer/revenue data. So we know, for example, revenue by customer by month. 3 is HR data. How many people do we have? How many contractors, freelancers are we paying? Making sure all that gets coded correctly to the P&L. And then we talk about bookings data. So 4 data sources that we need to have in place in order to have a good monthly financial process. So it starts with the data. Also kind of starts with the tech stack. What's our accounting software? How are we invoicing? Are we doing RevRec? How are we handling sales tax compliance and so on? So we have the tech, we have the data piece, and then that enables us to then create a forecast model, create that SaaS P&L, create the metrics that come off of my forecast model. But whenever I'm spinning up SaaS metrics for my fractional CFO clients, it's always a big data onboarding. Give me those 4 key SaaS finance data sources. Let's make sure the structure is correct. We're getting the right data, and then we can continue that process. So for me, for founders, depending on their stage, would be thinking about that, and then how we can drive decisions with that data.
Yeah, you mentioned tech stack and getting the data in place. Do you still use old-fashioned Excel, Google Sheets, or always the same tools? What would you recommend there?
Yeah, I think even, I help a lot of founders kind of in that a couple million to 50 million ARR stage. A lot of times they just have accounting software, maybe some subscription management software. So if you're, say, 5-10 million of ARR and just have accounting software, we make sure the accounting foundation is placed, but then to calculate retention, we need that MRR schedule. We need the MRR waterfall. So we get that native invoice data, customers, start and end dates, product lines. We can create the MRR schedule, the MRR waterfall, which creates retention calculations. We don't need fancy tech yet. We need good, clean data, but eventually we then hook up a subscription management system so we can invoice accurately, invoice timely. And then those systems also have revenue recognition systems if we're invoicing in terms longer than a month. It does speed up the process if founders have some sort of subscription management in place, because that system usually produces a lot of good data that we need in our monthly financial process.
Yeah. For example, we have, we're a Dutch company. I made the mistake of getting a bookkeeper who has no idea about SaaS. So we have like our own P&L in a way where we just do it in Google Sheets. I don't know if you even still your template or not, because we implemented quite a long time ago. Is that a good place to start?
I use a lot of Excel, so it's fine. So depending, in SaaS, like according to my survey, and it's country specific. In the US, a lot of people use QuickBooks Online. Outside of the US, Xero. Then you see Sage, NetSuite, and other country specific solutions depending on local compliance. But yeah, you can take that native P&L and export it to Excel, Google Sheets, run through a mapping process, and create this great looking SaaS P&L. It's because usually accounting software is very hard to put in that custom reporting. But yeah, you can export it, map it, and then have this great looking SaaS P&L so you can see your revenue streams, your COGS, your correct gross profit, OPEX, EBITDA, and so on.
If I could put it into accounting software, I would love to. I tried to get the American software to work, but my bookkeeper didn't like it. So we went to the good old fashioned Google Sheets or Excel.
Yeah.
Where do SaaS companies or SaaS founders struggle when really trying to get insights into their metrics and finance?
Boy, I mean, it's a lot of things. When I talk to a lot of founders, really they're managing their business just with the native financial statements coming from their software, their accounting application. And that only gets you so far. And oftentimes they're just so messy, you have no clue what's happening economically within your business. So it's then, and they have a business growing, they want to hire, get investment, or exit at some point. So we have to take it beyond that. So we have to have one good, clean financial statements, a SaaS P&L. We need a forecast in place. We have to start forecasting the business, forecasting cash runway, forecasting all those new hires and where we wanted to invest in the business and does it make sense? And then from there, so sometimes it does default just to good financial management of a good SaaS P&L, close the books on time, create a forecast. And then from there, all right, now let's start calculating some metrics. Let's look at your retention, go to market efficiency, and start putting metrics in place. We then benchmark how are you doing against your SaaS peers. It helps us focus what's working in our business. Let's keep doing that. What's not working. For example, SaaS companies offer onboarding and charge services revenue where they're completely mispricing it. It's a drag on their earnings. So we can uncover things that are not working that then they can prioritize as far as what they want to focus on.
Yeah. And I can speak out of experience. Like I was head of customer success at Leadfeeder, where we thought it was a good idea to manually onboard all our clients. We hired a couple of people where we started to onboard them, and then we created tiers in our client base, 4,000 clients. We looked at retention within a tier. If they were onboarded or not, would it have an effect on retention? And in the end, we found out that for the lower clients, like it didn't make any sense, because if they wanted to churn, they would churn anyway, and having a call wouldn't make any sense. So we could only do that with having proper data. Is really important.
Yeah, yeah, definitely. I mean, I talk to a lot of founders who come to me and they're like, "Hey, I'm just running financially blind. I have no clue. I can see revenue, cash in my bank statement, but beyond that, what should I do next?" We can put a good financial structure in place with the metrics, with the framework, so you're headed in the right direction, not off a cash cliff or whatever might be coming up, or you hired too fast. So we want to go from historical data to now being more proactive, looking to the future so we can steer the ship. Otherwise, you're navigating blindly.
That's probably what a lot of companies do. They look at the bank account, what they need to pay employees, and make their strategy from there.
In the US, we talked a lot of SaaS companies who are implementing this EOS system, entrepreneur system, or something like that, and rocks and all this stuff. And reading that book, they mentioned on the numbers side, imagine if you're flying over the ocean, the pilot says, "We have lost all instruments. We don't know where we're going, but we know we're getting there fast." It's like, right, that doesn't work. And that same thing with SaaS company, we have to steer our SaaS company with data and metrics.
Having a proper P&L is probably the first good thing to do. Are there any other simple financial moves a founder should do today to improve their financial strategy?
Yeah, I would say one big thing, SaaS P&L. We get the right revenue streams, COGS departments, tech support services, customer success, DevOps. That gives us gross profit. And then OpEx is R&D, sales, marketing, G&A. Getting that in place gives a lot of information. We can look at margins by revenue stream, OpEx profile as a percent of revenue. How are we trending against peers? EBITDA, net income, or net earnings. That's a big thing. It's just a nice looking SaaS P&L. Then just a basic forecast. Again, depending on your stage, make sure we have a forecast in place. Where's revenue going? How many people do we want to hire? And again, if you're over 10 million ARR, you should have a lot in place. But if you're, 3 million or less, it's just those fundamentals to get that in place and track bookings data, your SaaS P&L, track bookings data, and then figure out how you can create your MRR schedule.
Yeah. And you mentioned G&A. I personally never heard of that one before. What does it mean?
G&A is general and administrative, finance, accounting, HR, IT, legal, the CEO, founder, those back office functions. So there's I'd say, there are no standards in SaaS, but the SaaS P&L, pretty accepted that we have our COGS area and what I mentioned before, and then OpEx, again, would be R&D, sales, marketing, and G&A.
Yeah. And do you have a template that people can use?
I've got tons of free templates. I've got a blog, and maybe we could be in the show notes, but it's at SaaSCFO.com, and you can download all my templates for free. And I've got, the SaaS P&L structure, what should be included in COGS. I just updated my OpEx profile. I've got stuff on RevRec. I've got a post on the 5 major SaaS revenue streams, a lot on my blog.
For people listening, I know there's still a lot of acronyms and things might still sound like rocket science sometimes if you use a template like the one we're actually using yours. So if you are using templates from Ben, like you will be able to fill out everything without needing to understand like everything, I guess, what is mentioned today. But it should be a really good start. When we turn it around, we talk a lot about mistakes and misconceptions. What are some best practices for building a function that supports growth and scalability?
Yeah, I think, at some point, generally you have to consider hiring a full-time CFO above 10 million ARR, fractional CFOs kind of in that 3 to 10 or even 3 to 20, because you probably do need some finance champion owning this process. And again, the tech stack is so important in the back office, right? We've got payroll, accounting, invoicing, RevRec, sales tax compliance, expense reporting. Like the tech stack is so big in SaaS and it's expanding. We have to have almost like our internal product roadmap. And I publish my annual tech stack survey, which you can also get from my blog, of what's being used in SaaS companies. So you can see those top solutions. So it's the tech, it's the data, and really eventually you're going to put FP&A process in place, which is financial planning analysis. We close the books, analyze the performance, forecast, understand metrics, and then we have a financial review call. So I think that's probably ignored in a lot of SaaS companies where they don't have a finance champion, is just having that good finance routine in place. Even if you have an outsourced bookkeeper, which is so common under 10, rarely do I see someone in-house, is let's make sure we close our books on time. I see a lot of this where outsourced bookkeepers, it takes them 2, 3, 4 weeks, and then we're into the next month. We need financial statements faster than that. My expectation for outsourced bookkeepers is they have the books closed by mid-month, at least by the middle of the month. Then the founding team, exec team, just review those numbers. Where is cash trending, revenue trending, basic financial management. So if you can start there to make finance part of your executive process, then that will be a start, because you need finance data. SaaS companies take a very formulaic approach to scale. And that's why the framework and the data is so important.
Yeah, so close the books earlier to figure out quicker what's going on so you can act on it.
Mm-hmm.
What is a popular belief? You have a big following on LinkedIn. Like, you probably have a lot of people who you follow where you're like, well, I don't really agree with regarding financial metrics within SaaS. What do you disagree with?
I think you see a lot of stuff in social media, and I think sometimes people are trying to overcomplicate things or make things seem really complicated. You need to be doing this, this, and this to manage our SaaS company, the basics. I've helped a ton of SaaS companies. I've seen different pricing models, subscription, variable usage, services, managed services, hardware. It comes down to good accounting, a good SaaS P&L, having your revenue categories separate, and having a forecast in place. So let's not make this complicated, because it doesn't have to be. I've followed this rinse and repeat process with those 4 data sources we need to put in place. From there, we can put that nice process in place. Don't get overwhelmed or discouraged if you see stuff on LinkedIn and different social posts of, like, I'll be speaking on this soon, actually, about ARR and variable pricing. You see all these posts, well, ARR is dead and metrics don't work anymore. And that may be the case, but for most SaaS companies, it still works. So let's not overcomplicate things, because it does come down just to basic financial management.
Maybe talk about what works and what doesn't. Like, for example, the gross margins, are they still the same when you now look at like all the AI wrappers and I guess like all the AI tools who do have a lot more cost than probably other SaaS tools?
Yeah, and that's an interesting conversation right now, because it's like, well, if you're AI first, well, maybe you won't have the 80% gross profit that's considered best in class for SaaS companies. Maybe that's true. But at some point, credits and the tokens are becoming cheaper. We're not there, but we'll get there. Like when we first moved to the cloud and we had to buy servers and it was expensive and hard to scale, same thing. So it's still, I think, TBD that, will AI run lower gross profit, but then maybe that will continue to scale up because, compute power will become cheaper and credits will become cheaper, et cetera. So, but that is a good point. We just have to be aware of the cost to deliver revenue. When I say COGS, cost of goods sold, or cost of revenue, if you're AI first and hooked up to OpenAI and that expense, right, we've got to understand how much is it costing us to deliver revenue. So whether it's AI or Amazon, we've got to watch that and see how our gross profit scales over time, because that's where I see a lot of founders get into trouble. Is they have low gross profit, say they're running in 50s, they're bootstrapped, they want to grow, they want to exit at some point. They don't want to raise capital now because they want to control their own destiny. And it's hard to scale that way with low gross profit. You have to understand what's causing it, SaaS P&L, and understanding your COGS departments and how that's trending over time.
When somebody's bootstrapped, haven't taken any VC money, like, what is your opinion towards debt? I guess like any kind of other debt you can take as a SaaS company, good or bad?
Oh yeah, debt. Yeah, it's popular now to offer debt, recurring revenue financing to SaaS companies. A lot of players in that space now. I just wrote a LinkedIn post on that the other day. But yeah, a lot of founders want to take on some debt. I just took on helping a new SaaS founder where they took on a bunch of debt. And now they're like, we have to do something with it. It's sitting in our bank account. We're paying interest and we need ROI on that debt. So one, with debt, it's a good way, right? Again, not to give up equity, but you need to have a plan. You need to know your numbers, your economics, your cash flow, your EBITDA. You have to have a forecast in place. Can I absorb those debt payments? Is it interest only? Is it principal and interest? Or do I have some big balloon payment, principal payment at the end that I've got to pay off or refinance or exit, and that money then covers that debt? So With debt, you really have to know your numbers, your cash flow, pretty stable. If that's the case, then it can be a good source because it's got to accommodate your current cash flow so you can pay off that debt.
So don't just take it, coming back to the 5-pillar SaaS metrics framework, get that in place before even.
Yeah, know your numbers and then know what you're going to do with it. Where are you going to invest? Is it to build your go-to-market function? Is it to build out your product roadmap? But you've got to know, you've got to have a plan and targets to make sure you don't just see the debt as a cost, but you're investing and we're getting return on that investment.
Yeah, makes sense. And I mean, I kind of mentioned at the beginning already, you have a huge community and a lot of resources. Tell me more about the community and how people can get value out of the community, following your newsletter, following you on LinkedIn.
I started my blog in 2016, almost 10 years ago, just to share my templates, freely in-depth posts about SaaS metrics and finance and accounting and forecasting. My goal was to pay it forward and share what I'm accumulating as a SaaS CFO. I've built up to about 83,000 subscribers to my newsletter. You can join my newsletter through my blog. I sent a newsletter today talking about your OpEx profile, how to benchmark it. Plus I've got a SaaS Metrics School podcast. So just tips and tricks on finance and accounting and metrics for SaaS founders, for CFOs, for SaaS operators. So I've got my newsletter. I've got my academy also at SaaSacademy.com, where I have free and paid courses on SaaS metrics and SaaS finance for CFOs, controllers, founders, accountants, those people new to SaaS. I've got a community. So I have, a lot of different channels for distribution of my content, but my newsletter is the main one where you can see like events that I'm holding and, just different things that will help SaaS operators.
Yeah. What are the popular topics?
Yeah, I think like SaaS metrics benchmarks, always very popular, because say if you calculate your CAC payback, how does that compare against your peers? Is it good or bad? And you have to know that, especially if you're going into due diligence. So SaaS metrics are always a thing. Revenue forecasting, always a very popular topic. Like how do you accurately forecast your revenue, subscription revenue, usage revenue, services, etc. The SaaS P&L is always a popular post on LinkedIn. The proper format of the SaaS P&L always gets a lot of interest, but also because you can take so much from a properly formatted SaaS P&L. And like tax, very important. People don't like to talk about tax compliance, but it's like, again, there are always some popular topics. Plus templates are always popular.
Yeah, they probably get a lot of engagement. Regarding benchmarking, like I know a lot of people, of course, are on LinkedIn and following people, and then they see, hey, how we grow from 0 to 10, whatever the number is, in X amount of months. How would you recommend that people look at benchmarking? So not just looking at the posts on LinkedIn with the success stories, and how should they compare themselves?
Yeah, so I always say aggregate SaaS benchmarks are dangerous to your health. So, we see all these reports out there where they're just like, hey, CAC payback should be this, or retention should be that. Those reports are great eye candy. But when I benchmark SaaS companies, I do it two ways. It's limited to data sets. The metrics can only go so far. I use benchmark.ai and Ray Reich's data. But if you get big enough data set, I like to benchmark by ACV. So what's your average price point? If I'm selling a $10 product versus a $500,000 product, there are much different expectations for my benchmarks and efficiency. Also ARR size, like our OpEx profile. How much are we spending in R&D as a percent of revenue? That's going to be much different when you're 1 million ARR versus 30 million ARR. My 5-pillar metrics framework, the benchmarks I put in there are some are ACV specific and some are ARR specific. Then we can really benchmark our business appropriately, because I don't like those posts that say, hey, you're doing great if your CAC payback is less than 12 months, or your retention needs to be at least 110%. That's not the case in B2C or small price point B2B. You have to be careful with what people say or what benchmarks they're using, or if they publish their numbers, right? They've got to be very relevant and specific to you to make use of it.
Yeah. So kind of know the background of the numbers before even, I guess, like trying to look at them. When we look ahead, like what is the biggest risk or opportunity within finance or SaaS finance strategy that founders should prepare for in 2025 or beyond?
Yeah, I think one, of course, financial management, but the big thing is, revenue models are changing, pricing models are changing. We've got usage, outcome-based, value-based, depending on our business. Maybe that doesn't matter. The talk is just staying with the revenue models, the pricing models, because that does adjust our metrics a bit and our economics. And then also, it's if we are an incumbent and we have, traditional SaaS, can we survive a competitive threat against an AI first competitor? Who may have a different cost structure, different pricing model that could be, 1/5 of your price. Thinking about the changing business models, because if we think back in the 90s and on-premise and we moved to cloud, and some software companies didn't make a great transition to cloud and were bought by others. Now we're in this different stage of, all right, traditional SaaS, but now AI first SaaS. And, how is that evolving? Does that impact us at all? And how is our pricing model evolving? Does that have to change and impact our metrics? So a lot going on within SaaS and just the evolving pricing model. Because I think Salesforce had the big splash of Agentforce and outcome-based pricing, but really it's almost usage-based. Is it truly outcome? Not sure. I think it's staying tuned into what's happening on that front to make sure we're not surprised by new people coming in that have just a pricing model that could really shake us up.
Yeah, nice. I'm gonna probably ask the impossible from you. You mentioned you write so much about SaaS financing that we're trying to do it in 40 minutes. I'm going to ask you to give your best advice for SaaS founders right now within 2 sentences. Like, what would you tell them?
Yeah, know your numbers, and financial discipline never goes out of style.
Of it. Getting back to the foundation. If we talk about growing a B2B SaaS in general, like what kind of advice would you have for a SaaS founder who's just starting out and growing to 10K monthly recurring revenue?
Yeah, if you're just starting out, again, one is good, clean accounting. Have a good accounting foundation. Make sure you close your books on time. Have a bookkeeper, if you're doing it, or a bookkeeper who knows the SaaS business model. So one, just good financial statements. That's what you need, that early cash, knowing your cash. And then also just a really, really basic forecast, just to kind of stay ahead of things. So under 10K or growing to 10K or 0 to 10K MRR, it really is just, all right, let's have accounting in place. Let's make sure that's clean, so you can focus on building your product, figuring out, product market fit, all that stuff.
Yeah. Nice. And we're going to make a huge step. So we're going to assume that we pass 10K MR and we're going to grow towards 10 million AR. What kind of advice would you give SaaS founders here?
If you're nearing or on a path to 10 million ARR fast or near there, you should have my 5-pillar SaaS metrics framework implemented. You'll need that data to scale your business, and also if you're going to go through any due diligence. So I would say that's expected. If you're about 10 million or growing to 10, that would be my expectation. I talked to a founder who was under 2 million and already had implemented a lot of my SaaS metrics framework, which was impressive. And I told them, like, you're ahead of 99% of the founders out there. Now, he took my course, so he knew what to do. But at 10, you do need to put some financial framework in place.
Okay, cool. Well, let's make the plug even bigger, I guess. Like, if people now think like, okay, I want to get that course, I want to get ahead. How much would you charge for the course, and can people just really do it by themselves, like the guy you just spoke to?
Yeah, definitely. I've got free content on my blog, so the SaaSCFO.com, so you can start there. Tons of free content, templates, some things you don't know that you didn't know about that maybe it's not relevant now, but it will become relevant. So ton of content for SaaS operators there. Then I have my academy at the SaaSacademy.com. And again, same thing there, free and paid, free content, and courses that start at a couple $100 up to 2,000, depending on where you want to take your training.
Yeah. But in the end, it's money well spent. If you know your numbers and you can actually know what drives revenue, then it can be easily be
quick ROI. Yeah,
exactly. Nice. Well, let's see if I can try to summarize. So we started off with cash is king, but it doesn't say how the business is actually operating. Don't ignore finances at the beginning. It starts with clear data. When we look at your 5-pillar SaaS metrics, it's growth, retention, margins, financial profile, and efficiency. If pre-revenue, get bookkeeping in place. After that, get a proper SaaS P&L in place and check, of course, customer revenue data, HR data, and other data. Start forecasting and benchmark yourself against others. Well, benchmarking, aggregated benchmarks are bad for your health, so do it by ACV and ARR size. Have a finance champion, fractional. You can have one when you're around 3 million ARR, but hire a CFO above 10 million ARR. close the books on time, don't make things too complicated, make sure you know your cost to deliver revenue. Debt is a great way to not give up equity, but know your numbers before taking it. And then I guess when we're coming to the end, 10K MLR, clean bookkeeping, financial statements, focus on cash. And then when you're going towards 10 million AR, get the course from Ben and check out the 5 pillar metric framework.
Yeah, great job.
Nice. We're gonna link to all the templates, to the blog, newsletter, to the podcast, academy, everything you mentioned. Anything else before we jump off?
In 40 minutes, we covered a ton. This is what I've learned over 25 years in finance and accounting. It's baby steps. There's a journey here. And, again, I've got those resources. I've got my sites. But again, if anybody has any questions or you're just so confused on where to start, just email me, ben@SaaSCFO.com, and always happy to point you in the right direction.
Yeah. We're gonna also link towards your LinkedIn profile, but I can imagine that you can't accept any more new connections, or have you not hit the limit yet?
I haven't, but I listened to another podcast that talked about that, so I'm more aware of the connection limit.
Yeah, because I think you can still only have 25, and what is it now? You're 40,000 followers, 50?
I have 28,000 followers, but not as many connections.
You need to be selective. So email Ben. Thanks for coming on. For people listening on Spotify, leave us a review if you haven't. It helps us to rank higher, beat the algorithms, and we're going to add a poll towards this podcast. So always happy to hear what you thought of it. Thanks again, Ben, for coming on.
Yeah, thanks for having me. Enjoyed it.